For what, 5,000 years, there's been one asset that has outlasted every empire, every currency, every single crisis, and that's gold. It's the ultimate store of value, right? But what happens when you take this ancient metal and smash it together with the most disruptive technology of our time? Okay, let's really get into this.
And this quote it hits the nail on the head. Throughout all of history, gold has been the ultimate firewall for value. When economic systems start to wobble, when things get shaky, where do people run? They run to gold. It's this global consensus that doesn't need a government to back it up.
So to kick things off, let's just unpack that idea for a second. What is it about this one shiny metal that's made it the bedrock of value for literally millennia?
Now have a look at this timeline. It really shows gold's power when things get uncertain. Back in '71, the US dollar gets decoupled from gold and boom, the price just explodes. Fast forward to the 2008 financial crisis, it doubled in 3 years. Then the 2020 pandemic, new highs. And with all the inflation and debt flying around today, you've got analysts saying it could break $4,000 an ounce.
And right here, this is the big twist in the story. Because while we all get why gold is valuable, investing directly in its source, the actual mine, has been basically impossible for pretty much all of us.
Which leads us straight to the heart of the problem. The trouble with gold mines. We're talking about these massive, massive barriers that have always kept regular people like you and me out of what is an incredibly lucrative market.
First up, just the price of admission. The typical buy-in to get a piece of a traditional gold mine deal is a jaw-dropping $5 million. I mean, that's not just a high barrier. It's a giant wall that locks out 99.9% of all investors.
Second, let's talk about speed. Or, the total lack of it. We live in an age where you can trade stocks instantly on your phone. But a cross-border deal for a mining asset, that takes an average of 28 days to settle. It's an old-world system running on old-world time.
And finally, liquidity. This number? This is a killer. It's the annual turnover rate for these assets. At less than 0.3%, it basically means your investment is trapped. Good luck trying to sell when you actually want to. It's incredibly difficult.
So you get the picture, right? The traditional way is exclusive, it's painfully slow, and your money is totally locked up. It's a system that was really just designed for a tiny select few. What we'd all want, the ideal, is the complete opposite. Open to everyone, instant, and tradable. But how in the world do we get from here to there?
Well, this brings us to the really cool part, the solution. It's a technology that promises to just shatter all those old barriers. Blockchain.
The core idea here is something called real-world asset tokenization, or RWA for short. And all it really means is you're creating a digital token on a blockchain that represents actual ownership of a real-world thing, like, say, a piece of a gold mine. This is honestly the best way to think about it. Forget some dusty paper deed locked away in a safe somewhere. Instead, you have a super secure digital token that you control. It's just ownership, completely reimagined for the digital age we live in.
And this breaks down perfectly how it actually works. Step 1, the real-world asset, in our case the gold mine, gets legally verified and audited by people you trust. Step 2, a unique digital token is created on the blockchain that represents your ownership. And step 3, that token can now be bought, sold, and traded instantly with anyone anywhere on the planet.
Okay, so let's move away from the theory and look at how this works in practice. We're going to peek inside one company that's trying to do this right now, GODL LABS.
So they are taking this super high-tech concept and applying it to a very real, very valuable asset on the ground in Tanzania. Now, this is pretty pioneering stuff, which means they're trying to navigate a brand new, very complex path.
Now, what they're doing here is really clever, but it's also pretty complex. You have to look at their legal structure. The actual physical mine is in Tanzania, that's the real-world asset base. But then the governance and the fund itself are based in the Cayman Islands for compliance. And the global marketplace where you trade these digital assets, that's centered in Dubai, a regulated hub. It's a truly global solution for a global asset, which also means you're dealing with 3 different sets of international laws.
So here's the game plan, how their whole machine is designed to work. First, the mine's value is confirmed, and its ownership rights are put right there on the blockchain. Then, a regulated fund is created to hold those assets, which protects investors. After that, they use tools from the world of decentralized finance, or DeFi, to create a liquid market for the tokens. And finally, those tokens are made available on a compliant global network. It's a model that's trying to connect the dirt to the digital world.
And look, this isn't just some abstract idea. It's backed by a tangible claim. We're talking about a mine with initial authorized mining rights valued at $500 million. It's got proven reserves of 1 million ounces of gold, and it's all been verified by a US-listed auditing firm. This is the real-world anchor for the entire digital system.
So let's zoom out. What does this all mean for the bigger picture? Does a model like this actually have the power to completely reimagine finance as we know it?
Well, on paper, it looks like a lot of people could win. Investors, you get access and liquidity. Mining companies, they get cheaper financing. The host countries, they can attract global capital to develop their resources. And the whole financial ecosystem gets a new, more efficient way to work. But this perfect picture definitely doesn't come without some serious questions. So let's spell out those potential upsides, because they're huge. For investors, the barrier to entry could drop from millions of dollars to, well, whatever you can afford, and you get instant liquidity. For the miners, financing costs could get cut almost in half. And for countries like Tanzania, this is a powerful new tool for economic development. But, and it's a big but, this innovation also brings major challenges. Like, how do you enforce ownership rights across 3 different legal systems if something goes wrong? What are the tech risks? And how are regulators all over the world going to react to these new borderless assets? These are the real hurdles that will decide if this model actually works.
This quote just perfectly captures the ambition here. The idea is that gold is no longer just something you stick in a vault and forget about. It becomes an active, programmable asset that you can actually use in the modern digital economy.
And really, that's the whole story. What we're witnessing is the attempt to build a massive bridge between the physical world of assets we valued for centuries and this new, incredibly fast-moving digital world of finance.
And that leaves us with this final, absolutely fascinating question. I mean, if you can do this for a gold mine, what's next? Are we really heading towards a future where you can buy a tiny piece of a skyscraper, or a section of a forest, or a famous piece of art, all as a digital token? And maybe more importantly, even if we can, are our legal and financial systems even remotely ready for that future? That's something to think about.